Hey, welcome to the Airmere Roundtable. Today is the 29th of January, 2020, and I have a guest, Bubba from Bubba's Trading. Welcome, Bubba. It's the first time we've been together. Glad to have you here.
It's great to be here. And what's up, everybody? Obviously, market's a little active today, a little craziness going on, but always good to share some knowledge and some information. And fortunately, some of the things I do. Oh, the mic. You're right. The mic is low. You know why? Because I forgot to put it in front of my face. How's that? Is that better?
That is better. Yep.
You know, I push it back and forth. I got a whole soundboard here and everything. So I hope that is better. Some of the I do a lot of day trading when it's busy, like it is today, in futures. But I also do a lot of algorithmic trading and a lot of stuff that's just done once a day. And there's no matter what happens during the day, nothing changes. You know, in other words, we only change overnight if there's a change to be made. So, anyways, what's up? Welcome aboard, everybody. And it's nice to share with you some of the information. And I understand this is a fairly well informed group. So we'll get started. And just one of the things I always like to talk about is what we do in our algorithmic trading. It's very rule based. And I used to trade with the Turtles, okay, Richard Dennis, not with them. I traded in the same pit with him back when he was in Chicago, because I did start in 1980. And one of his famous quotes is, I always say you could publish the rules in a newspaper and no one would follow them. The key is consistency and discipline. And that is always, no matter what kind of trading you're doing, that is always the key, is consistency and discipline. Okay, you can be the smartest person in the world, but if you're not disciplined and you're not consistent, you ain't gonna make money. Okay, so anyways, there's always the disclaimer. So I'll let you guys read that before I get started, and I give you about 5 seconds. But it's there's risk and it's hypothetical, and the whole everything I'm showing you here. I mean, I'm going to show you some real results, but for the disclaimer part, they're hypothetical. Okay, so here we go. And anyways, using a mechanical system is the best way to consistently make money trading if you know that your system makes money over the long run. Okay, so when we talk about over the long run, if you have to know, one of the things you have to know about yourself, no matter what you're trading, is your win rate. Okay, what percentage do you hit winning trades? Okay, if you don't know that, then you better learn it, because again, it's going to help you over time. Okay, help you make better decisions. It's easier to take signals and follow the system during periods of losses. If you rely on your own judgment during trading, you may find yourself fearful just when you should be courageous, or courageous when you should be fearful. And again, these are all things that come back down to trading. Okay, emotional traders very rarely make any money. Okay, they will have their moments, but very rarely will they hit the big top, because they are typically a little bit too emotional. Okay, so again, things you want to consider. This is me, Todd Bubba Horwitz. So this is some of the TV stuff I do, co-hosting with Maria Stewart Varney. But I've been doing TV for, I don't know, about 10 years, I guess, back and forth. And I've been I'm a 40-year member of the exchanges. Okay, I'm currently a member of, you can either say the Board of Trade or the CME. They're both the same now. But I have, when they were independent, I was a member of all three. I'm the founder of Bubba Trading. I've written 2 books on options. Okay, I regularly contribute to the major networks, and I trade all my stuff. Anything that I recommend, anything that I do, I'm trading in my own account at the same time. Okay, there is no, I'm giving trades away. Okay, I trade them myself. That is my account, and I'm always happy to share those as well. But I have become a big fan and a big believer in algorithmic trading. We've got a pretty solid algorithm ourselves, and it works well. And I do have some subscribers that do subscribe to it. But again, it works really well. And again, it's what I love about it is that I don't really care if the markets are dead. Okay, then I don't have to look at anything, and I don't trade. Back in the old days when I was a floor trader, we'd go to play golf in the summer, and in the winter we'd play backgammon or bridge if there was nothing to do on the floor. So the whole key is that we're always focused on trying to trade a market that we can gain an edge in. Okay, now obviously retail traders, not so easy to gain an edge all the time, but but floor traders, we could. But again, so what you have to do as a retail trader, which we all are, you know, when you're trading on a computer, you're now a retail trader. You've got to learn to set up the trades properly, and you can't afford to give up too many of the edges that there are that you can put in for yourself. So today we're going to just talk about why algorithmic trading, success or failure, the family offices, profit factor, shorting stock, creating synthetic stock, portfolios, how to take advantage, and questions and answers. So, you know, one of our most objectives, our first one is what? To make money. Okay. Nobody wants to trade not to make money. That's what you're trying to trade for. You're looking to make money. You want to try to keep your variances small. Okay. You want to be somewhat balanced, and you want to keep the drawdown small. Okay. Now we all know. Okay. Now anybody here, if you can say that you've never had a drawdown, well, I'd say one of two things. Either you're not trading, you're a liar. There's got to be drawdowns. It would be relatively impossible to not ever have a drawdown. It's just part of being part of the marketplace. You know, markets do what they do, and even if you can put yourself in the perfect position, in what I like to compare it to, even if you can give yourself pocket rockets, okay, they don't always win. So that's one of the important things that we always like to make sure that we understand is where are we, how can we do it, and keep these things in place. I could trade without knowing the name of the market, which is a fact, okay? Because one thing that if you're using a chart to trade, now, you know, when floor traders, we didn't have time to use charts, so we didn't use them. But if you're reading a chart and you're trying to make your decisions based on a chart, okay, then it doesn't matter. Then all markets are the same, all charts are the same, all patterns repeat themselves. Just remember one thing, that all patterns repeat. The shortest time frame always has to resolve itself into the longest time frame. So every new trend starts at the shortest time frame. Okay, we cannot get, this market will not have a major downtrend, and so we start trending lower in a 1 minute, 5 minute, 13, 10 minute, 20, 30, 60, hourly, and so on. So in each and every time frame, all the patterns are always the same. So your idea, and what the best thing for traders is to try to figure out, is pattern recognition. Okay, because again, depending on the time frame that you're trying to trade, it always comes back to the same thing: recognizing the pattern that you're looking for. Okay, and if you can do that, again, you're giving yourself another spot for potential success. Long-term profitability, that's one of the things people like to have. Anything can happen day to day. All right, you can never let one day when you're trading through a mathematical system affect what you're thinking. It's the same as when I teach people how to hedge their portfolios. Okay, you know, one day means nothing. Okay, as long as all the key factors are in place, which is the variances are small, everything is doing what we're trying to do, then we don't have to worry, okay? Because we know, again, we go back to knowing our win rate. Because in trend following, if you do it correctly, you are gaining a huge edge, okay? And that is something that we're always trying to find when we're trading in markets, is to try to grab an edge, okay? Now, trend trading, price is everything. The news, the coronavirus, that doesn't mean, does anybody really believe that coronavirus really caused that sell-off on Monday? Okay. Does anybody here believe that? I'm just out of curiosity. I like to get interactive as well. So I'm just curious. You do? Okay. All right. Well, again, hey, you are entitled to your opinion, but I will say this: it had nothing to do with it. Okay. Did they suddenly get a cure overnight? No. Okay. What you had a market that was weakening at the end of last week anyways. And typically, okay, if you've looked back in history, you will see many of the bigger down days come on a Monday. Why? Because people have 2 days at home to think about it, okay, and get nervous about it, okay? Price tells you everything, and the price indicated at the end of last week that the markets were looking a little bit weaker, okay? And if you just take a look at the chart of the S&P, I mean, you could see that going into the week, Tuesday, Wednesday, Thursday, Friday were all weak. And then, of course, Monday was weak. So, again, it wasn't a total surprise, and I put no credence into it. But again, you can, but I don't even, except when I'm going to be on the news, I don't ever watch the news. To me, it's a waste of time, okay? Which goes to ignore the news. You buy a stock when it breaks out, or a future, whatever it is. You sell them when the trend changes, okay? Don't get out before a trend changes direction. Now, I'll give you just an example of one of our futures portfolios, which is also ties into our equities, because we use the Qs as well as the NASDAQ. But, many people that trade with me, okay, if you remember the last time Amazon reported earnings, okay, the last time Amazon reported earnings, everybody was all freaked out, okay? This was the last time. Oh my God, we got to get out of our NASDAQ beers. We got to get out. We got to get out. I said, look, do what you want. The system says to stay. Okay. So many puked out, okay, of the NQs, okay, down here, all right, right in this little break. And we never did. And of course, some of these changes, because it's obviously a little ugly with all that stuff in there. Let me just change it to a clean chart. Okay. And of course, we never got out. And of course, look what happened. We just got out yesterday. Okay. So we rode the NASDAQ all the way up. The signal that was one of the main indexes that never changed. Okay. And the next question is, well, when do you get in? Well, it's hard to say. Okay. My recommendation is always, if you're trading through a method, okay, that is a trend following method, then you get in when you want, because what do you know for sure? If you're wrong, the trend's going to change and it's going to take you out. Okay. And I think that's something that is also important to understand. Stick to your system. Okay. Quit chasing the shiny objects. Okay. Learn what you learn best. Learn what makes money. Okay. For you, because we're all different. Okay. If you're going to trade independently and try to do different things, then trade what works for you. I don't believe that I'm the only person who cannot predict future prices. No one can consistently predict anything, especially investors. Prices, not investors, predict the future. Despite this, investors hope or believe they can predict the future, or someone else can. A lot of them look to you to predict what the next macroeconomic cycle will be. We rely on the fact that other investors are convinced that they can predict the future. And I believe that's where our profits come from. I believe it's that simple. When I was designing what turned out to be a trend following system, a mechanical and a mathematical system had not really changed at all. Yet the system continues to be successful today, even though there's virtually been no change to it over the last 18 years. That is a quote from John Henry, okay, the owner of the Boston Red Sox, which is where he made all his money. And again, my simple point here is that price drives markets always. There is nothing else to do but watch price and understand how price works. Okay, because we can think we know more. And again, I traded everything, but I've always had to be conscious of price. Okay, now we do in our equity portfolios, we use a lot of synthetics. Okay, they're known as risk reversals or synthetic stock, whatever. Now, as a floor trader, I didn't have to worry about margin, but as a screen trader, I have to worry about margin. So we have different ways to do that. What we create, either a synthetic long stock or a synthetic short stock, depending on what the market is doing and what the trend is. But we do believe in using the synthetics because, again, if you understand them, you will understand that you can make more money. You take out a lot of the risk factors, okay, of trading, okay, plus the fact that you also are eliminating time decay. So not only do you get a cleaner run of the stock, okay, but you eliminate a lot of those things. Now, the only one disadvantage with a synthetic stock risk reversal is simply the fact that you add a shade more risk to the trade, but the risk only comes if you're dead wrong. Okay, it adds no risk if nothing happens, and that's one of the things. So when you look at it, you say, well, either I want to be I want to be long a market or short a market, you can create that. We'll show you how to do that. I'm sure some of you know. Try and look at your weaknesses and convert all your strength into strengths. That's success. Okay, that's what we're looking at. And basically, what I created was I created a product for people that wanted to, trade with the big guys, okay, but didn't have the capital to do so, okay, because we use a tremendous amount of leverage when we're trading. We leverage up, at some points 11 or 12 to 1, okay, depending on the amount of capital you have. And of course, it's got to go back to your risk capital that you're dealing with. But that's something that we always want to make sure that we understand. And again, because everything we do comes back to risk capital, okay? And what you can expose yourself, not what you can gamble, but what you can lose without losing the car payment, without losing the rent, okay? And at the same time, be able to sleep at night, okay? We got the Fed today, so I have my special like, are you crazy? Call the Fed, right? And again, earnings season has been pretty good, but markets are not quite reacting as well as we might think. But again, they're still higher. They're still near the all-time highs. And as far as I'm concerned, we're probably still going higher, but who knows? Buy when a stock you can create. Why buy a stock when you can create synthetic? Okay. And of course, that's where we talk about leverage. So we look at a synthetic long stock. Okay. And I'm just going to create real quick here for us. So if I wanted to buy today the spiders, let's say I want to be long the spiders. Okay. I've got a couple of different options that I can do, right? I can either, we'll go out to February 18th. Okay. So I can either buy a call. Okay. So I can buy an at the money call for 434, right? Or I can sell a put. I can sell a put spread. I can do all those things to get long. But if I want to get long, the best way to get long, okay, is to first do the collar synthetic, which this is what is known as a true risk reversal. Okay, this is you buy one and sell the other. That creates basically the stock, which is exactly what we're seeing here. However, if I can't, if I've got $32,000, which is what this trade would cost margin wise, there'd be no reason for me to do this. I might as well just buy the stock. So what we do is we add in and we buy an out of the money put somewhere, in this case, if we're going to be long. So we'll buy an out of the money put, and typically we'll go about, let's say 10 strikes away. So basically what I've done, okay, is I've created ownership for the call that you're going to pay $4.30 for. I've created ownership for that same call basically at $1.82. Okay. Now, what does that mean? Well, what that means is when you, if we sit here and do nothing, you're going to lose a lot of money a lot faster. Okay. You've got $4 risk or $4.30. I've got $1,000 risk or $11.80. Okay. But the difference is if the trend's going to change, I'll probably be out long before. You're going to lose your $4.30 no matter what. Me, I have no exposure to time here right now because my long option and I have a long and a short option, so they're decaying at equal rates. So again, this is one of the things we look at. Now, typically, if I were going to make this trade, I would typically come in a little quicker, and I'd probably use February 10th to start with, just because for me, it brings the debit down. And if we compare still apples to apples, right, we're still $2.50 cheaper. So my movement, if I am correct, is going to be much purer going forward. Okay. And I can do that on any stock, okay, that has liquid options, especially liquid weekly options. And that is one of the things that we're always focused on. We prefer to trade in equities that have weekly options. Now you can do the same thing on the short side. Okay. If I just reverse this out, okay, and then I just have to reverse this to a 338 call. Okay. Okay. So now I've created the same position now to the short side. Okay. So now I'm short the stock dead at 328. Okay. Now, again, why? Well, first of all, if you like to short stocks, some do. Okay. Many stocks are hard to borrow. I don't have to worry about the hard to borrow part anymore. I'm simply short the stock. Okay. At 328. Okay. So again, these are things that we do on a regular basis because I don't like to be naked short anything. I've seen over the years too many crazy things happen. So we are always focused on, again, trying to keep ourselves in the least amount of risk, biggest amount of gain, and highest probability of potential win. So that's a synthetic long stock and a short stock. Okay. Now, again, we talked about hard to borrow. If any of you have ever had stocks, I mean, even the spiders, believe it or not, are hard to borrow, which I find interesting since it's one of the highly traded ETFs that there are. But many times you'll get that hard to borrow message, and if you do like to do short types of trades, you will find out that you'll be much better off. Okay. If you use the option model to do it, you'll never have that problem. The stock will never get called from you. And I think there's a lot of advantages to using this model. Okay. And that's one of the things that we look at. Okay. Is I just had to update somebody. So sorry for losing my attention for a moment. Again, it's that hard to borrow section. Now, a true risk reversal. Okay. Now, I don't typically use risk graphs. I'm not a big fan, just straight out, because again, they can't tell when you're doing stuff over time. If you're using different expirations, they don't work as well. But again, just to show you, obviously, we cap off at wherever you decide where you want to buy that extra option. Okay. That is one of the things that we look at is where is that extra option that we're going to buy. And that is where this risk graph will melt off to the side and show you your maximum amount. But we know, and we calculate out different size portfolios because a lot of things that we're concerned about and what we talk about is profit factor. Okay. Now, when you talk about profit factor, okay, it's a good profit factor is about 2 to 1. Okay. Our profit factor using our algorithms are much higher than 2 to 1. Okay. And you're going to see in here, you'll see some portfolios, and then I'm going to show you where they are as of now. But, the old story, you have to know when to hold them and know when to fold them. And of course, again, trading the trend, you just have to know when it's time to change. And then when you do change, you have to be willing to stay with it until it reverses back the other way. So when we trade, okay, we are always in a market. Okay. So this happens to be one of the portfolios. Now this portfolio has a total portfolio of about 313,000 at real money. Okay. The cost and margin requirement is 13,000 to run this portfolio. And of course, we like you to have, if you're going to trade, 3 times the margin. Okay. I always believe in 3 times margin. And this has stocks, Apple, Bubba, it's got some pretty good pretty big high beta names. But that is that portfolio then, and here is that same portfolio as of Saturday, okay? Now, as you'll see, I carry and show a risk graph, and you can see we had a big drawdown here. And again, I show each and every week how these perform, okay? And you can see the profit factors here are 117 to 1 right now. But again, that will vary. But again, you can look at this, the open trades that were created. We've been long Apple since 203 1/4. Okay. We've been in many of these for an extended point because here's all the dates of entry. Okay. We just reversed in Bubba back here at about 218. Okay. So again, these are, and you can do these with any, and I have different sizes or portfolios that will allow you to be able to trade. Here's one that's like, let me show you the numbers first, and then you can see the portfolio now. Okay. So here's what we call the 2A. This portfolio, this leverages 101,000. Okay. It's about 4,000 cost. So you should carry about 12 grand in this portfolio. Okay. Here's the 3A. okay, which is our smallest, okay, it's kind of for about 4,000 you can do. Now here is the 3A live, okay, and you can see the dates, okay. The last update was on the 24th, okay, 124, just made new equity highs, okay, and this one right now, the profit factor is so high it can't be determined. But again, that I don't ever want anybody to get excited about that. These profit factors will usually end up somewhere between 20 and 50, which is still a hell of a lot better than 2 to 1. But they're all, balanced type of portfolios depending on the size of your account. We have a FANG portfolio, which we require a bigger margin because obviously the FANG stocks are crazy. Okay, they're much wilder. They're much more expensive to put on. So we prefer, if you want, now I don't necessarily recommend it. I mean, you've got to have an awfully big account to trade those, but I will show it to you because again, I show everything. I don't hide anything. This is the FANG portfolio, and you can see the wild swings. Okay, it just did make equity highs, and this is trading at a profit factor of about 19. Okay, now again, simply put, okay, these are the results, and they're volatile. Okay, and that's where you have to look to where you're comfortable and what you're trading. Okay, because at the end of the day, it comes down to money. So we want the actual margin cost here is much less, but we want to make sure that you have plenty of capital to go through those major drawdowns because they're going to happen. Okay. And that is, again, something that you need to be, very firmly aware of how markets deal with themselves. Now, we also deal in the futures world. Okay. And we use the same algorithm. And if you just take a look, here's just another one of these algorithms that this is what we call our 72K portfolio. And again, you'll see every result listed since its inception. Okay, each and every week there is an update here. Okay, and what you see here is again new equity highs. Okay, and again you see the big losses. So again, you get an unbeatable right now profit factor. But of course, that's typically what will happen when you're continuing to break the new highs. It's hard. The numbers are innumerable. But this portfolio, okay, max drawdown was 8%. Okay, this portfolio is up over 200% since its inception of 18. Okay, our biggest one, the 226. If I can find it, I'm pulling these up live as we speak.
It's always dangerous.
Well, it's all right. It's somewhere located here. I mean, I've got it. I mean, obviously, but it just where did I hide it would be the better question here. So again, as you can see, okay. Now this is the oldest of this was the first, and this is the oldest version. Okay, so again, these portfolios, just so you understand, trade in this one's trades in 29 markets. Okay, we are always in 29 markets, long or short. We are never on the sidelines. Okay, what we do, we are never on the sidelines. We are always in a market. Okay, long or short, we are in. Okay, and again, this is as of 124. Okay, this portfolio obviously has performed very well, but again, I provide you with all these numbers each and every week. You get this full report every week when you look at these. Okay, these are again real numbers. You can compare them. We have places to trade them. And again, it's using the futures market. And again, these were some of the old equity curves. This is again showing you the SPY synthetic long. Okay. Now, the closer you come in time, okay, the better off you are, because the real key here is the least you are paying for the extra the extra put or the extra call you're buying to create the synthetic. Okay. Now, just a quick question, as you, I know, are very experienced options traders, which is best? If you knew for sure that there was going to be a big move in a stock and you knew that move was going to come next Wednesday, okay, which would be the best option for you to buy? Okay, and I will look for a couple answers in case somebody wants to help me out here. Anybody want to help out?
Short term for Marcus.
Right. You'd want to buy next Friday's options. Okay. Again, the beauty of trading options correctly, okay, is trading the shortest time frame that you can, knowing that you get the highest percentage payoff if you're correct. Okay. So again, if we know that we've got something that's liquid, that is weekly, that we can roll, and again, now with the lack of, the lighter commissions all over the place, we don't have to worry about that as part of our liquidity, because as many of you know, commissions are typically and should be considered a part of your liquidity. Okay. So again, these are all things that are important when you're trading, because whether you're creating longs or whether you're creating shorts, okay, you want to be able to put yourself in the best position at all times. And again, the beauty of what we're doing here is these are signals that are generated after the market closes. Okay. They usually spit out, around 7 or 8 o'clock at night. Okay. But again, for your own trading, you're better off learning how to use these types of strategies, even if you're short-term trading. Okay. I mean, obviously you're scalping, you're not going to use these, but you get a much better and a much bigger bang for your dollar if you put yourself into this type of trade or a back ratio, anything but a straight option. If you're looking to get some heavy movement, you want to eliminate as much of the outside cost as you can, allowing you to put yourself in a position to make the most amount of money. Okay. And that is something that we're always looking for, because these are the things that are part of the trading world, is how can you take the edge off the market? Like trading around earnings, very, very difficult to trade around earnings. Why? Because again, obviously the volatility explodes, right? So it's hard unless you know how to sell that early volatility and buy back volatility. So there's a bunch of things you can do, but using a straight risk reversal, with the extra option, creating that takes a lot of those problems away. Okay. So no matter how you're trading, those are things that you'd want to look to do and use in your favor. And these were just some of the original 3 portfolios that we started with, which with just the margin costs. Amazing performance by the managed portfolios. I wanted to send you a note to thank you for your continued guidance in all aspects of investing and trading. Your reassuring words every day really help me when I'm deciding whether or not enter a position or not. Hearing you stress patience, it's really be an invaluable tool. I'm learning more and more from you every day. Your years of wisdom share with us, as the MasterCard commercial says, are priceless. Again, the bottom line is what you need to learn in any form of the market is you can never panic. Okay. You can never no matter what you're in, trust me. Okay. Even if you look at today's market, okay, you look at what happened this morning. Okay. We were getting, the markets looked like they were going to go to the moon. Okay. Then they looked like they were going to collapse. And suddenly they decided that maybe they can go higher again. And again, the easiest way to do that is just looking at, which is this is actually what I trade off of. Okay. But we looked like everything was great. And look what happened. Bang. We got a little bit of a blow off pattern, which was actually a buying opportunity. And you can see the market, what has happened since then. The market is created the V shape. Okay. And now it looks like it's trying to maybe trend back higher again. We'll see what happens from here. But again, so you never want to panic and puke when you're on the wrong side, especially if you're using strategies that have limited risk. Okay. That's why we don't sell naked options. Okay. We, again, many sell naked puts. To me, not a very wise strategy, because there's so many much better ways to create that same position and cut down the cost of margin to carry that position. But again, to each their own. I mean, that's where you have to decide what you want to do. But again, for my money, for 40 years, I don't believe it. Okay. I do not look at using any of these things, because why should I put myself in an exposed position, okay, where the possibility always exists that I can't get out? So why would anybody want to expose themselves to a market that, if you're naked, you're short, okay, on the downside, they can go to zero, which means if you're short puts, they can go up whatever the price of stock is. Or if you're short calls, you just don't know. So again, I asked you, why would anybody ever want to be naked when you can create a position that takes off all of that exposure and all that risk? Okay. Because certainly, I mean, even an Apple, if I wanted to be a put spread seller in a stock like Apple, okay, I could sell, let's say the June 7s. Okay. So let's say I'm going to sell the 317.50s. Okay. For 262. Okay. If I do that, okay, what's the margin on that? If I sell a naked put, what's my margin on a $317 stock selling a naked put? 32,000, right? Okay. If I sell a vertical, again, I don't have to sell this one. I can take this out to here. Okay. I can go farther and I can reduce I can get almost the same credit, but now instead of having a $32,000 margin requirement, I've got a $2,800 margin requirement. Okay. Or 3,800, excuse me. Which is better? You tell me. Okay. So again, there's never, nobody could ever give me a valid reason to be naked short an option. Okay. I've seen too many guys go bust being naked short options. So to me, there's no reason. So why not create, okay, either if you're a premium collector, which is fine, then go ahead and create those short spreads, okay, but create them, with some protection and also a reduction in cost. We're all spoiled right now because of the cost of margin. There is none, basically, because there's no interest rates. But again, eventually that may change. So you're better off learning better strategies, which is why I always go back to, somebody always asks me, which is the best? Well, to me, these are the best, because again, this is what we do. It's just easier to be protected. It's easier not to have the major margin requirements. It's easier to make more money, which is why you're trading, is to make more money. So again, that's what I always go back to, is that you don't panic. And if you're set up properly with the proper position, whether it be a risk reversal, whatever it is, but it's covered up, then you never put yourself in jeopardy of having to make that panic or puke call. Okay. And that's, something that we always strive for. And, I know I don't have a full presentation, but if you have any questions about any option strategy or any trade, I'll be happy to take any of those from you. Okay. Now, again, this service is available if anybody's interested in it. Okay. It is. We do. Right now, we're offering a special of $129 a month. Okay. But the first month, you get 2 months for $129. You get a free month, or $1,400 a year, and you get 13 months for the year. Okay. For your first year, you get 13 months. But certainly, I'll answer any other questions or anything else you may have, if any.
So, Bubba, which product are you talking about with that special price?
The equity portfolios or the futures portfolios, which is the ones all the stuff I showed. Okay. you get all of them. Okay. You get either futures or equity. Okay. And so you get there's 6 equity portfolios and there are 6 futures portfolios. And we go all the way down to the micro minis in the futures. Okay. We start with a $5,000 portfolio and we go all the way up to a $276,000 portfolio. Okay. 226. Here is the 28K mini micro. So we're using mini and micro futures here. And again, that's, to me, these are the next big thing. Okay. These are micro, the CME made a great decision, unlike the CBOE a couple of years ago. Okay. When they decided to try, if anybody remembers, they tried those mini options on stocks like Amazon, things like that. But what they didn't do is they didn't adjust the commission. So you were trading a 10th, okay, or 10 shares at the same commission you were paying for 100. Well, the CME has reduced fees. So you're paying 10% of the fees and 10% of the commissions. Okay.
Which makes sense.
Do you have any other strategies apart long, short, apart from long? Well, I mean, I use back ratios when they are conducive. I use a lot of either weighted iron condors or weighted butterflies, depending if I'm making it. Like right now, I've got a trade on in AMD, okay, for earnings, which came out. Okay, we actually had on a trade, but let me just go back to my screen. Let's see, I gotta figure out where the hell I'm at here. Got so many things open. Okay, so I've got in AMD, I've got the we're short the. Well, actually, let me just pull it up. I can show it to you. Hold on. Let's see how am I going to get there? We're long we're short the 4750 puts, okay, and we're long the 4650 puts 1 by 2, okay, and we had obviously with the call set on 2. We were short this week's stuff, okay, short the 4750, short the 4950, okay, and we're long 2 of the 4650s and long 2 of the 50/50 calls. So what I'm looking for here now is we're going to lift one of the extra options off and lock in a profit on the trade, and then hopefully look for a little bit of a rally, and that spread will collapse. But I'll use whatever strategy I think fits best. I love double diagonals. Okay, I love double diagonals, using them over an extended period of time with the ability to continue to sell premium each and every week. Okay, I like to sell that kind of premium. Okay, how do you enter a trade long, short, based on what? Everything is always based on trend. Okay, except if I'm doing a double diagonal, I'm looking for a market to consolidate. Okay, but I'm not concerned if it's going to trend, because I love the double diagonals and the spiders, because you get 3 expirations a week. Okay, so you can see that you get opportunities to continue to sell premium, okay, over and over again. So that's something that I like to do. We tried to set up. I mean, we made money on Apple, but we actually were set up. Okay, got a bad beat by one day, but it happens. Okay, we were set up to make a ton and be naked long. Well, actually, naked long and short Apple, which obviously would have paid. We were at the 317.50, and we missed by one day of being able to get out of that, the short options. Now we still made money on it, but we were able to do that, and all the same thing happened and beyond. But typically, I will always carry double diagonals in the diamonds, the spiders, the Qs, and IWM, because those indexes, and even if they explode, I can still sell premium. They will have losses occasionally, but they will very rarely. They'll never reach max loss. Okay, that will never happen. But they will have losses occasionally. Okay. But it's the opportunity. See, what I'm looking to make out of all these trades is the ability to get to a free roll. Okay. The ability to get to an opportunity to own those options for free. Okay. Last week, we owned some options for free that exploded for us and went in our favor. So what I'm trying to do is I'm trying to finance out a double diagonal. Okay. So if I were going to do right now, for example, if I were going to do a double diagonal on the SPY, okay, so right now, so I'd be looking at Friday's expiration, obviously. So I'm going to look at the expected move is to Monday is about $4. So we're starting at 328. So I would probably do a, again, just a quick rough look, but I'd probably look at selling. First of all, I'd be buying out in Feb, I'd be buying the Feb expiration, which is Feb 20. Okay. And then, so I would probably buy, let's see here, where we at, 328. I'm going to buy the 332 and sell the 324 and buy the 324, excuse me. And then I'd probably, and then so I'd sell the 331 and I would sell the 325. Okay. Now, again, that's probably a little bit too narrow, but again, the debit on this trade would be, 462. Well, I know I've got how many expirations do I have to collect? Okay. So I've got 1, 2, 3, 4, 5, 6, 7. So I've got 7 expirations to capture $4 in premium. Okay. So if volatility stays up, I'll be able to capture that premium in 3 weeks. Okay, 4 weeks. But if it doesn't, again, I need to average about 70 cents a week to get all my money out and then have a free roll going to the last week. Okay, or the last expiration. And that's kind of what I'm looking for. Now, again, we got very lucky this week. We got huge premiums for our rolls this week. I mean, we had on some going out that Friday that we actually sold this morning, a 324, 327. Okay, we rolled it for $1.77. Excuse me, $1.67 this morning. So again, that already locked in a profit for the trade, and we've still got a chance to make some more money on it. So again, that's kind of what we're looking for. How do you enter a trade long short based on what? Well, when I'm trend following, again, I use a signal. I mean, I know how to read charts. You can see when I do a call every Monday night, okay, for some of my subscribers, okay, and you can see every one of my charts, okay, on my Monday night list are marked up, and I'm telling them, what I'd be looking to do based on the formation of the chart at that time, okay, and of course, again, you'll see every one of these has got marks in them, unless I've erased it recently, but again, what we're looking for is, again, as I said the other day, I thought that First Solar, if I was going to trade it, okay, I'd be a buyer. Okay. But to full disclosure, I said I'm short the stock from up here because that's when the algorithm turned. Okay. So we're actually short the stock. Okay. So that's, again, where I differentiate my ability to read a chart versus my ability to say, you know what, I'd rather just trade mechanically. Okay. Yes, I hedge in full. Okay. I have got, I actually have a course on hedging, but I mean, I will share with you some of my positions. Okay. Let me just go back to the side because I have the hedging part of it is done through automation. Okay. We have some software that actually executes, but here are my personal portfolios, but this is the one I like the best. Okay, because this is all weekly options with weekly hedges, okay, and all synthetics, okay, which is what I kind of like, okay. That's my baby, okay. That's what I typically like is to be in that position, okay, where I can go ahead and put myself into a position. So these are all positions that all started with 100 shares, but these are all hedged. Okay, there is no exposure here other than there's a mathematical number, which I can't go into now, but certainly I just did a hedging webinar using synthetics. If anybody's interested, I'll be happy to send it. You can email me at bubba@bubbatrading.com. But again, this is all stuff that is hedged and it's bought for various reasons. Now, none of these were bought because of my algorithm. Most of these were bought because they got crushed one day on earnings and I like the companies. But since I'm hedging it, it doesn't matter. Okay. So you can see varied quantities. Now, Roku, I originally bought it at $33. Okay. And it rolls consistently. And again, there's equations that I use, but these are stocks that I own or synthetic positions that I own. The only stock I own on these because we buy and add stock when a stock pulls back, we want to compound our portfolio. So we take the money we made from the hedge, we lower our basis and we buy more stock. Okay. So all these odd numbers are stocks that have been bought since the market has worked. Okay. And this portfolio is made, you can see it. Right? Those are the real numbers. Okay.
So if somebody wanted to follow one of the portfolios, say futures or whatever, I mean, you show what you've already got, but if they're just starting, how would you recommend they go about it? Or to just take the current positions you have or wait for new signals?
No. I always say you always put on where you're at right now, because again, if I go back to that NASDAQ example I gave you before, I don't know when it's going to change. Okay. So if you were going to come into the, let's say the 28K. Okay. You would just get in these positions as they sit, because what do we know? We know one thing that is factual. Okay. That if it changes, if the market changes, we're going to change. Okay. We're going to change that position. So why should I take the chance in these stocks? Why should I wait? Because how long can I wait for the trade? For example, Apple, we bought Apple at 204. Okay. So, if I waited for Apple, it'd be kind of ugly, right? It'd been a long wait, and I'd still be waiting. And
right.
At the meantime, giving up here. We bought it on 8/14. Okay, that's the day we bought it. Okay, at 203.25. We're still long it. Okay, so my recommendation is, if anybody comes in, is that they get in them as they sit today. Okay, why? Because again, I have no idea how long the trend's going to last. I have not a clue of how long we're going. Okay, because again, it takes intellectual properties plus some math calculations that this model has the ability to stay in trends longer than anything I've ever seen. Okay, it does not get shaken. The tree doesn't get shaken too quickly. So that's what we're focusing on. Is again, for those who want to be mechanical traders, to sit back and not have to watch minute to minute, day to day. Okay. And again, putting yourself where you have the overall edge to the market and the ability to stay and hold with the market. And I think that becomes the biggest secret for all traders. Okay. Again, patience is a virtue, especially when it comes to trading. That does not mean that you should not have some protection. Okay. If you're trading actively during the day, if I'm trading my positions actively during the day, which I do, okay, trade futures very actively. The minute I put a futures trade in, I put a stop right behind it. Okay, I'm not going to sit there like a schmuck and wait for it to come. I'm putting a stop in because either it's going to work, either the trade's going to work, okay, or it's not. And if it's not, then so be it. I will be happy to move on. But again, I use what we call the blow off pattern. Okay. So, and I use 2 time frames, 4 minutes and 1 minute. I actually bought here. Okay. Now it does it right about here is where I bought. Okay. And I put a stop in and I kept rolling the stop out and I got stopped out on the way down. Okay. So again, that's what so there's all different types of trading, okay, that you can do and stuff that you can use, but it really depends. That goes back to you. But if you're going to enter any portfolio and you're going to use an algorithm, then you have to follow that algorithm and follow that model. So you have to be able to differentiate through a trading plan what you're going to do with each particular one of your types of trading. I mean, I hedge is one model. I trade futures actively in another model. I trade futures and equities in portfolios. Okay. So they're all different. They all require different types of plans that go along with them.
And how often are the portfolio changed? Once a week, every day? How
Well,
often do you update it?
the updates, they're updated every day. It'll either say there is no trade or there's a new trade. Okay. And every Saturday, I send out a full recap of the entire week, the exact dollar amount, what we did, win or lose. Okay. You know, make money or lost money. Okay. Last week, this lost $1,800. Okay. You multiply this by 100. We keep score with one share of stock. So this portfolio lost $1,800 last week. Okay. But every week, the results come out just like this. You get all of the information that is just like this. If you're doing the stock or if you're doing the futures, okay, it comes out same way. Okay. You get all the profits and losses. Okay. Exactly. There is no, there's nothing subject to negotiation. Okay. It's exactly, here's what it is. Here's what we did. Okay. And again, that's because we want, again, we're in it for everybody. And I'm a straight shooter. I'm not looking to A, I don't want anybody to buy anything that they don't want it. And B, you got to be willing to understand it and understand that, that there's drawdowns, what happens, there's things that go on in markets, that are beyond your control. And, I do a daily update every day. I do a video update at about noon Eastern time every day, which I send out to all my subscribers. Okay. Just a quick market hit, what's going on. And I send out daily texts, during the day at the same time of what's, just things that are happening that I see and, things you can look at.
Well, thanks, Bubba. I don't think there's any more questions. Let me see. Oh, Marcus did ask, do you provide any theoretical or theory or teaching or learning as you go, like with these portfolios or?
I do. Actually, that's a great question. I do basically with the portfolios, there's guaranteed one training session a month. Okay. But I know that I get a lot of new people sometimes in these things. And typically based on the questions that start showing up, I've had about 11 or 12 training sessions. Okay. Which they're all recorded as well, just like you do, right? Zoom. Okay. I have all my stuff recorded so that if somebody started new, they can go back. But also I always do at least 1 to 2 training sessions a month that I, accumulate questions and then I go through everything. Or if I feel that there's a potential problem, like I'm going to do one this week because, there's a little bit of confusion yesterday. Every week we have certain equities that we need to roll to the next week, right? Or to the next cycle. Typically we go 2 weeks out. And I knew some guys for whatever reason want to roll on Tuesday. Now, for what reason, I have no idea because it makes no sense, but I can only explain it. If they want to do it, they want to do it. But I said, do not roll Apple today because you got earnings coming out. Let the earnings come out and then roll it. And it caused, some confusion among a few. But at the end, it all works out. But I'm on top of training. I answer emails within 5 minutes, even when I forget when I'm supposed to do something. Sorry, man. I apologize.
Oh, no problem. So I know you said you had a special price. How do people take advantage of that?
I don't even know if I don't even know if I have the link here. I wasn't thinking of selling anything. Okay. So, but I'm gonna look. You know what? I don't know, but let's see if it's in there. And I don't even know if it works. How's that?
There we go.
How's that for preparation? Okay. Where am I? I got so many windows open. I got to see where I'm at. Okay. So I'll tell you what. I'll tell you what you can do. You can use. What did I use last time? Let me see if it works. Okay. Really pretty unprofessional. What do you think?
Well, if you can't find it now, just send me an email with when you have it.
If anybody's interested, you can use bubbatrading.com/micro. Okay. It's all lowercase, bubbatrading.com/micro. Okay. That'll bring you to a page, which is for futures, but you can specify you want either futures or you want equities. Okay. And for today, because I'm such a putz and I screwed up, I will give 3 months free of the other one. Okay, that you can evaluate both, but you'll pay for one, you get 3 months free of the other. Okay, so just let me know in the when you sign up that you want either equities as your main product or you want futures as your main product. I'll give you either. I'll give you 3 months free of the other. You $129 a month, and then if you want to do it for an annual, okay, it's bubbatrading.com/micro year. Okay, and I will give you the same free 3 months of the other product, and if you like the other one better after 3 months, you can switch it with no problem. Okay, and if you have any questions, you can email me at bubba@bubbatrading.com. And anything else, if any questions anytime, please, and please invite me back again next time, another time.
Okay.
Maybe they don't want me back. That would be better.
Well, I'll ask people what they want, but I'm sure that it's interesting. I'm sure they would like to hear more about, say, hedging or other things you're doing.
There's no sample classes, but I'm going to do a similar webinar to this on Saturday. Okay. Which you'll hear a lot more questions. You're welcome to join. And again, just go to bubbatrading.com. You'll see the webinar there. Okay. At noon Eastern. But I'm pretty good at teaching it, and I'm pretty good at keeping on top of people. I mean, if I don't answer an email in 5 minutes, it means that there's a problem. I might have died. Okay. I'm pretty on top of everything. But again, that's why I give you 2 months for one, so you can check it out. Right. But I don't think anybody really needs samples. If you know anything about the option world, it's pretty basic. Okay. But again, I'm happy to help in any way that I can. And the fact of the matter remains is back to my opening statement. Okay. Which is I'm in every one of these trades. Okay. I mean, here's one of my, hold on 1 second. I'll show you. I have to take the account number off of it. Okay. But I'm going to show you right now. Okay. The micro live. Okay. Portfolio. So let me just cut it and get it. Hold on 1 second. Uno momento, por favor. Let's see. Okay. One more. Okay. So here's that was a spiral, by the way. That was a different one this morning. But okay. New. Okay, so okay, 1 more second, and then I know you guys want to get the hell out of here, anyways. Huh? So let me just cut my account numbers off. Okay, and cut. All right. So I'm just pull this screen down. Okay, I just painted in here. Okay, this is my account. You can see my name, right? Todd Horwitz. This is the open positions right now. Okay, this account. This is not the one I want to show you, but here's actually the one I wanted to show you. That's a hybrid account. Okay, hold on. I don't know why I always get this wrong. Okay, this is the one I want. This is the one I want. Okay, so really? Okay, this is the one I want to show you guys. Okay, so this is okay. This account started with 15,000. Okay, when we first started the 28K portfolio, there I have 15 because I've got 5 different accounts, so I didn't need to put 28 here. You can see these are the exact trades. This was one reversal that we had one trade today. We went from long silver to short silver. Okay.
And when did you start that portfolio?
This portfolio started in September.
Okay, that's pretty good return since September.
No, I mean, listen, they've been hot. They've been good. But I mean, the return on the big one, I mean, the 226, which is it's returned 446% since its inception, which is November of 16. And I only show results that people could have actually attained. You know, in other words, I trade these before I ever release them to anybody. I trade them myself to make sure that they can make money. Because again, it's not my intent not to be able to have people make money. So that's kind of what we do.
Right. Well, great. Well, I have the links in the meeting description for our library, and I'll post it on YouTube as well. It looks like, oh, there was another class or a question. Can you say again, when is the class we can join and how to get there?
You can go to bubbatrading.com, and there will be a link for equity portfolios Saturday at noon. If you have any, listen, if anybody doesn't want to do that, just email me at bubbatrading.com. I will email it to myself. Okay.
Fair enough. All right, Bubba. Well, really appreciate coming on. Nice to get to know you a little bit. Hopefully the Chicago weather is not too bad right now.
I don't go outside. I don't care, but I appreciate it. Thank you so much for having me. And again, I hope you'll have me back, even though I screwed up, but I'll be better next time.
All right. Sounds great. Well, thanks for your time, and we appreciate it, Bubba.
Thank you. Have a great day.
You too. Thanks. Bye.